My name is Karen Mary's daughter. I'm with the group 350 Maine, working on the fossil fuel divestment team. We're here today to talk about LD 1461, which is a bill that would require the Maine Public Employees Retirement System to divest their holdings in fossil fuel stocks as a response to the threat of climate change. We have a few people here today who will speak briefly, and then we will take questions after that. So we will begin with Representative Brian Jones of Freedom, who is the lead sponsor of LD 1461.
In the interest of full disclosure, I will say that I am a retired educator and fully vested in the Maine Public Employees Retirement System. I don't think it's news to any of us that climate change is real, and it is caused by human activity, burning of fossil fuels. Some of us may confuse climate with weather. It's really easy to do in winter in Maine. Just think of it this way. Climate is where you decide to go on your holiday. Weather is what you put in your suitcase. And climate change, the scientific consensus is the climate is changing, and it's because of the burning of fossil fuels. We don't have to look very far to see the effects in Maine. Invasive green crabs are threatening our clam industry. Our shrimp fishery is now closed. Our lobster industry is threatened. Our ski areas recognize climate change as a long-term threat. Our maple syrup industry is also threatened by the prospects of climate change. The composition of our forests are changing. More invasive insects and pests are finding their way into Maine as New England becomes warmer and warmer. And that's only the effects that we see, and those are the only effects in Maine. I mean, Australia right now, for example, is on fire, day after day, above 110 degrees Fahrenheit. So why divest? I think it would be naive to think that divesting our pension funds from fossil fuels would have any direct impact on fossil fuel companies. But I would argue that it is the right thing to do. But not only is it the ethical and right thing to do, there are some pretty compelling financial reasons to do so as well. 167 countries signed an agreement, including the United States, that recognizes that if we allow the global temperature to rise above 2 degrees Celsius over the next 50 years, we will it will cause incredible suffering for humanity and dramatically change our environment. In order to do that, to keep the climate change below 2 degrees Celsius, we can basically only burn, we can't burn all of the proven fossil fuel proven reserves. And those reserves are already factored into the share price. So fossil fuel stocks essentially are built with, the proven reserves are stranded assets. In other words, they're overvalued because they're counting on their books, and their share price is based on reserves that they can't burn without cooking the planet. Secondly, there are alternative energy investments that are ethically better investments, environmentally better investments, but also in terms of profit-generating capacity. Given what we know about the carbon bubble and these proven reserves being stranded assets, investments in other alternatives will prove to be more and more appealing relative to oil. And thirdly, public sentiment is, quite frankly, outraged at some of the conduct of fossil fuel corporations. All we have to do is look to the public reaction to the oil spill in the Gulf, the British petroleum oil spill. All we have to do is look to states and cities in the Midwest and southern New England that have instituted bans on hydraulic fracturing for natural gas, so-called fracking. And closer to home, we saw a huge public outcry concerning a proposal to reverse the Portland-Montreal crude oil pipeline to transport tar sands oils through South Portland. So public sentiment in those areas, anyone who's paying attention sees that fossil fuel companies are becoming more and more stigmatized. And when people really realize that we will be, the federal government will be providing over $130 billion in subsidies for fossil fuel extraction over the next 10 years, they will be outraged. And when they realize the campaign contributions that fossil fuel companies make to our congressmen, okay, and senators, they will be even more outraged. So I would argue that given the fact that their portfolio contains stranded assets, that alternative energy investments are becoming more and more attractive relative to fossil fuel, and also that public sentiment is creating an outcry, are all compelling reasons to divest our state pension funds. Now, in the past, the legislature has directed the pension board to divest from Sudan, South Africa, Namibia, and those divestment efforts were strictly ethical and strictly moral. Okay, there was no financial imperative driving those. And I would argue that the divestment of the portfolio of fossil fuel stocks not only does have the ethical and moral component that previous divestment campaigns had, but it also has a very powerful and compelling financial reason to do so.
Thank you, Brian. Our next speaker is Stephanie Layton. She is a Senior Vice President at Trillium Asset Management in Boston and has lots of experience with fossil-free investing.
My name is Stephanie Layton. I'm a Senior Vice President and a Portfolio Manager at Trillium Asset Management, which is based in Boston, and we're the oldest investment advisor devoted exclusively to sustainable and responsible investing. We have clients all through the country, and many of them in Maine as well, and protecting the environment is the #1 issue of all of our clients. And I have a personal interest in Maine. I have a second home on the Penobscot Bay in Stockton Springs that I've owned for about 8 years, and the draw for us is retirement and the natural beauty of the state. So I'm a dual citizen, Massachusetts and Maine, and so I'll tell you a little bit about my background in terms of the investment history. I'm a chartered financial analyst, charter holder. I have 31 years of investment experience, including 23 years at Trillium Asset Management, and I'll be testifying a couple of hours on, voting to ask the state to divest their assets from fossil fuels. So our firm, which is employee-owned, we've managed sustainable and responsible investments since 1982. So 31 years, and the interest in fossil fuel-free investing is really exploding. It's the fastest growing segment of our business and actually represents now 20% of our portfolios at Trillium, and we manage about $1.4 billion in client assets. We're also the sub-advisor for a $100 million mutual fund called the Green Century Balance Fund, which has performed quite well and has an environmental mandate and has been fossil fuel-free since we started managing it about 7 or 8 years ago. And I believe somebody from Green Century will be testifying today as well. So we're, in addition to the client interest, we're seeing many states and institutions and other institutions ask us for our expertise and knowledge about the financial impact of fossil fuel divestment. And so in the last 3 months, I myself have testified in Boston. There's a bill in the State House there. I've testified in the District of Columbia. And a couple of my colleagues on the West Coast have testified in several of the areas on the West Coast, including San Francisco and Seattle. And so to sum up what I'm going to say today, in our experience, fossil fuel-free investing is a very credible investment approach. And I'm going to tell them that as an investment manager, I fully understand the demands to make a portfolio that seeks to maximize returns while minimizing risk. That's what we do. We wouldn't be in business if we couldn't do that well. And I will reference several studies in my testimony. If you get my testimony, there are links to the actual studies. But basically they include that these portfolios are no riskier in terms of volatility, and many of the studies actually show you do better without fossil fuels. As Brian Jones, the representative, said, that this is the traditional fossil fuel industry really is a dinosaur industry. It's a commodity business. Portfolios can be built with other commodities in them besides fossil fuels. Another way, if you want some more information, on my company's website, there's a a publication called Extracting Fossil Fuels from Your Portfolio, A Guide to Personal Divestment and Reinvestment. And it was put together by 350.org, Green Century Balance Fund, mutual funds, and Trillium. And a lot of resources in that as well. Okay, so quickly, Trillium, our experience managing fossil fuel-free investments since the beginning of 2007, we have performed in line with the S&P 1500 net of our fees. So what that means is these portfolios have actually done better than the benchmark because there's about a 1% management fee applied to that. So pretty much tracking the benchmarks over that period is slightly better over that time. Now briefly, how do we do this? How do we manage the risk of avoiding a certain part of the market? There are all types of portfolio optimization software nowadays that help us manage the risk of avoiding a certain segment of the market, helping us find other substitute stocks that track the movements of the fossil fuel industry in terms of size, in terms of volatility, in relation to the benchmark, a term called beta. And so we also can find substitutes that correlate very highly. There are all kinds of clean tech companies, industrial companies that make energy efficiency products. So when energy prices spike, the energy efficiency stocks do well. So these help to minimize the risk of avoiding traditional fossil fuels. We're also, of course, investing in renewable energies, which was one of the top performing groups over the last 12 months. And one of the other ways that we mitigate the risk of investing in the little bit more volatile renewable energy is we often buy big companies that are engaging in renewable energy as a smaller part of the big company. And so that helps as well. So I will conclude today and tell you today that we do believe at Trillium that an investment portfolio can provide competitive returns over a full market cycle while managing the conscious choice to avoid the fossil fuel exposure.
Thank you, Stephanie. Our next speaker is David Smith, a retired public school teacher from Belfast, Maine.
Hello, my name is David Smith. I'm a retired elementary school teacher from in Belfast. I worked for many years in the RSU, it's called RSU 20 now, in the Belfast area. Taught mostly 4th, 5th, and 6th graders over the years. And this is my second year of retirement. And frankly, I miss the kids, but my work here and in other areas is very important to me. So, as a recently retired elementary school teacher with 30 years of experience, I'm asking the Maine State Retirement System to divest from all fossil fuels. First of all, I'd like to express gratitude to Maine State Retirement System. It's kind of neat getting a check in the mail. It's not much. I call it my meager pension, but I appreciate that I'm a part of this. With a deep sense of caring and concern, I think of my 2 grandchildren and hundreds of my former students. Thanks. So when when I'm thinking of divestment, I'm seeing my grandchildren. I'm seeing my students. I remember it really like yesterday when the Exxon Valdez disaster occurred, and I had a class of 4th and 5th graders here in front of me, and it was devastating. That was a long time ago, and I think that being a teacher helps me now really remember that. And we one disaster after another. In the paper this morning, the next one, there's the tankers again derailing in New Brunswick, was on the front page of the Bangor paper. So my students took the threat posed by fossil fuel industry very seriously. Now it is our responsibility as adult leaders to do all we can to protect our fragile Earth from future degradation. The extraction, transportation, and finally the burning of fossil fuels is warming our planet at an alarming rate. Not only do we have to deal with the horrible effects of oil spills, fracking, pipeline ruptures, tar sands removal, but now we must confront the consequences of burning fossil fuels, as CO2 levels in our atmosphere rise, warming the Earth. So to conclude, divestment from fossil fuels sends a clear message that we care about our children's future. Now is the time to divest. Divest because it's the right thing to do. Divest because we need to take responsibility as leaders to help our country transition to a cleaner, livable world. Thank you.
Now we have Phil Coop, who is the co-founder of Revision Energy, I believe the biggest solar energy installer in the state. Is that correct?
That is correct, yes. My name is Phil Coop. I'm in the business of renewable energy, and I'm here today to state that there is a very strong business case for divestment in Maine. In the past 8 years, my business partners and I have started 3 profitable and environmentally sustainable renewable energy companies involved in wood pellet home heating, solar electricity, and solar hot water. These businesses have all been growing at 20% to 30% per year for the past 5 years. We are succeeding in Maine because fossil fuel costs are high here due to the lack of local availability. We're at the end of the pipeline. We're succeeding because Maine has the highest per capita CO2 emissions in New England. And we're succeeding because Maine has abundant renewable resources in the form of wind, tidal, biomass, and solar energy. And I want to point out that Maine's biggest industry today is tourism. It accounts for 85,000 jobs per year and somewhere north of $5 billion per year in economic activity for the state. And you can't have a thriving tourism industry in the state that also has the highest per capita carbon pollution in New England. We need to fix that problem before it harms our biggest industry. In regard to our local renewable resources, it's really noteworthy that Maine has 33% more solar energy hitting our territory per year than Germany. And I want to point out that Germany has the strongest economy on the planet today. And they have achieved that through some of their domestic manufacturing, but also by the fact that they have invested more in renewable energy than any country in the world for the last 20 years. And that should be illustrative to Maine, for Mainers. People also need to know that the cost for solar electric panels has fallen by 75% over the past 5 years. And that has created an amazing investment opportunity for homeowners, business owners, and even fund managers. We can deliver a guaranteed 8 to 10% annual return on investment from a solar energy project, which is much stronger than you can find in any CD and much more reliable than what you'll find in the stock market today. It's also worth noting that solar equipment comes with a 25-year warranty, and you have no moving parts anywhere in the system, so you have extremely reliable power plants using solar energy. Today, Maine has 440,000 homes that are heated with oil, which is contributing to us having the highest per capita CO2 emissions in New England. We also happen to have the most heavily forested state in the nation. More than 90% of our land mass is covered with biomass. And as our paper and pulp industries decline, we have an opportunity to reinvest that local domestic resource into low carbon home heating. Today, an automated pellet boiler, when it's replacing an oil boiler, will cut your annual fuel costs by 50%, and it'll cut the annual CO2 emissions by 90%. Another great renewable investment opportunity for Maine. I want to close with a fact about our total energy consumption in Maine. In 2011, we used 266 trillion BTUs of energy from all sources of energy, both fossil and renewable sources. Or put another way, that's 78,000 megawatt hours of energy. We only need to cover 1% of Maine's land area to meet 100% of all of our energy demand on an annual basis. And that, to me, sounds like a phenomenal opportunity to start reinvesting in this renewable energy resource that we have abundant on many levels in Maine, and again, in the form of wind, tidal, solar, and biomass energy. Thank you.
That's a great question, because the pension fund, most of the pension fund is passively managed. It's a series of of baskets of stocks that are designed to track indices. So we haven't been able to disaggregate those index funds to find out exactly which portion, what the size of the portfolio is invested in fossil fuels. 3% to 5%, maybe 6%, but we're not certain of that, and we actually couldn't get that information from the financial advisors of the pension fund themselves. In other words, since they're tied up in index funds, we don't have access to that disaggregated data.
But there are some good signs from my perspective. We've had 100 years of a pretty substantial paper and pulp industry in Maine, and the fact that we are still the most heavily forested state in the nation after 100 years of that logging activity, to me, illustrates that we've been responsible, sustainable stewards of the resource. And we do have pretty strong laws in Maine regarding the cutting of the forest resource. To understand the fact that you can reduce CO2 emissions by 90% when replacing oil heat with pellet heat, you have to step through the logic of sustainable forestry management. There's a well-understood ratio in forest harvesting, whereby for each acre of forest, you can harvest 1 cord of wood per year, such that the remaining trees in that stand, in that 1 acre, will digest the CO2 emitted from burning the cord that was harvested. And that same stand of trees will also regrow another cord of wood for harvest the subsequent year. And so that's a pretty well understood, harvest ratio for sustainable forestry management.
Well, we did have a conversation with the retirement board, and they did sort of indicate it's roughly 3 to 5% of the portfolio. Be aware that the bill is asking to divest from the top 200 companies of the largest reserves of energy that ideally we would like it to stay in the ground. But there are other companies in the fossil fuel industry that the state could still invest in. So it's not like it's 100% no fossil fuels if they wanted to. Now, we have portfolios, as I said, 20%, absolutely none. It's all renewable energy if we have any energy. So, the risk would be, of course, if we have extremely strong fossil fuel prices. But, as Brian said and others we're observing in the market, the fossil fuel stocks have been out of favor for a long time, and the renewable energies are becoming every year, more and more cost competitive. And, as I mentioned, there are many stocks that track the traditional energy stocks, energy efficiency companies. Johnson Controls, which makes the building controls, so when you leave the room in a building and the lights go off, the heating goes down. Those stocks will do well if the commodity prices of fossil fuels go up. So you can minimize the potential impact if commodity prices are strong. Our outlook, because of China having way overinvested in their infrastructure, they are going to take a lot. Even though they have something like 10% of the world GDP, they have 40% of the consumption of basic commodities in this world, in the global economy now, and they are way pulling back on their commitment to infrastructure. They have a lot of empty buildings, roads and airports that aren't being used, and so we think that there will be less pressure on oil prices for quite a while. And so, as I said, we're willing to testify that this, obviously, for moral reasons, we recognize that this is a crisis. And, I think the foot dragging and, trying to pretend that somebody else can do it, we have to all start doing the right thing as soon as we can. Because we've already passed, 350.org, we've already passed the 350 parts per million in the atmosphere.